Welcome. In this video, I've created a trading system that takes advantage of daily high, daily low stop hunts and then back tested it. So I'll show you the results at the end after explaining the strategy, all the parts to it, such as stop loss, take profit target, trade management, and the indicators needed. So last week's video, I talked about daily high, daily low stop hunts. I tested them to see if maybe they're worth taking a look at and creating a system around. In that video, I determined that it was definitely a valuable thing to take a look into and try and develop a trading system that takes advantage of these daily high, daily low stop hunts. So this is that strategy. I put together this one quite quickly and back tested it. The results were incredible. So here it is. And let's talk about the indicators needed first. First indicator is our trend direction indicator, which is a 200 period exponential moving average, but it is a 1 hour time frame 200 EMA. Okay. Note I'm on the 15-minute time frame. This is Bitcoin US dollar. And the next indicator is a daily high, daily low indicator. So just marking the daily high and daily low each and every day. There's tons of indicators that do this in the indicator section. Then there's the Fu Manchu Market Cypher B indicator. This will be used for entries. And I've just gotten rid of all of the colorful things that show up on it and just kept the basics, just the waves. So nothing else has changed, though. I did not change the inputs of the indicator itself. So if we go in, we can see the Fu Manchu, and it's called the Fu Manchu Market Cypher B. Looks like I don't want to have spaces here. Here it is, Fu Manchu Market Cypher B plus divergences. So yeah, I got rid of all the colorful stuff, just kept the waves. And now let's talk about how do we actually take a trade using this strategy. Here are the rules for a short trade. So first rule is previous day never touched the 1 hour 200 EMA. So here's our previous day right here, outlined with the high and low, and it never touched the 200 EMA, which is way up here. Also, price was under the 1 hour 200 EMA the entire time. Okay. Number two, current day's price takes out previous day's highest price. So here's our current day for this example. Price gravitated towards previous day's high, and on this candle here, it wicked through previous day's high, taking out the previous day's high. Number three, we're going to be waiting for a cross down on the market Cypher indicator. Okay. Here's our cross down right here. And then we're going to be waiting for a lower high cross down, which will be our entry signal. Okay. So we get this cross down. It's not our entry. We're waiting for a lower high cross down. So here is the next cross down on the indicator, and it's a lower high on the indicator. I'm not talking about a lower high on price. I'm talking about a lower high cross down on the indicator. So this cross down happens lower than this first cross down. All right. Now that we have that, that's our short entry signal. Our stop loss will be placed at the highest point between the last cross up and cross down of market Cypher. So here's our last cross up, this green dot here. So coinciding with this candle, and our cross down, which is our entry. What's the highest point between these 2 points right here? This candle's high. That's our stop loss placement, right? Take profit target will be placed using a 1-to-3 risk to reward ratio. So that's what I have here on the chart. And then for trade management, moving the stop loss to break even when price has reached 2 times the risk in the trade's favor. So once we get 1-to-2 risk to reward ratio here, we would move stop loss to break even to protect capital and continue targeting 1-to-3 risk to reward ratio, the original target. Okay, so that is the strategy. Everything you need to know about it as far as the entry rules go for a short. But here's another thing that I am making part of the strategy. So I'm actually allowing 2 entries per day, but only when this happens. So this is also a valid entry. Here's what we need to see happen for a second entry. So we have this current day's high now, which took out previous day's high already. price needs to make another new high after our first trade has already concluded, which it does so on this candle here. Okay, so new high, higher high on this current day. And then we're looking for the same setup that we were looking at here. So same rules for the entry. So we see price push up, and then we're waiting for our cross down. So we're back to number 3, rule number 3, cross down on market cipher. And then the first lower high cross down is the short entry signal. Okay, so here's our cross down, market cipher. Lower high cross down is right here. We get another cross down, but it's a lower high on the indicator, right? So that's our entry signal. And highest point between last cross up and cross down on market cipher, that's going to be our stop loss. So that point is up here. And that's the trade setup. Same thing, 1 to 3 risk to reward ratio. Stop loss goes break even at 2 times the risk, 1 to 2. So go to break even here. And that is the trade setup. So only when this happens, where we have a completed first trade based on these rules, and then price goes on to make a new high, higher than this current day's high here, which happens on this candle, then we can look for another setup based on the same rules, using the same setup, okay? And that's the maximum on any day is the 2 setups, okay? So let's move on to a couple more examples. Same trend here. We'll just go to the next one. Okay, so here's another sweep on daily highs, right? So we have this day here, price is under the 200 EMA hourly, and we see the high of previous day is swept right here, taken out on this candle. So just to make things very clear, this is previous day's high. This day we push and take out that high on this candle right here. And then we're looking for a cross down, according to our rules, cross down on market cipher. And then we're waiting for a lower high cross down. So that lower high cross down is right here. That's our entry candle. Stop loss is placed according to our rules. Highest point between last cross up and this cross down. So that point would be this high right here. And then we're targeting 1 to 3 risk to reward ratio. Stop loss to break even at 1 to 2. And that is the trade, okay? That's the example there. And then we're done. So next day. Again, highs are taken on this day as well. And so we actually do have another 2 trades in one day set up here. And so this day right here, you can see it's entirely under the 200 EMA. Price is taken out the highs here. Previous day's high taken out on this candle. So then we're looking for a lower high cross down on the market cipher here. Higher, 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 and then finally we get our lower high cross down right here, okay? So that's the entry signal. Stop loss is placed according to the rules. Highest point between last cross up and cross down. This one here makes it 1 to 2 risk to reward ratio, but it never makes it to 3, okay? Gets stopped out at break even according to our rules right over here, okay? So that's done. And then remember, we're allowed to take a second trade, but only under the condition that price goes up and makes a new high, okay? It does so here on this red candle, sweeps the high, new high for the day. So we can look for the setup again. Here's our cross down. We're looking for a lower high cross down, which we get right here. Stop loss can be placed according to our rules right here between the last cross up and cross down. And then this one ends up being successful with a 1 to 3 risk to reward ratio, hitting the profit target. Okay, so that is a short setup. Let's cover some long entries now. All right, let's cover a long trade. So previous day never touched the 1 hour 200 EMA, and price was over the 1 hour 200 EMA. So here's the previous day for this specific example. We have the price here, never touched the 200 EMA, stayed over it. So valid for rule number 1. Number 2, current day's price takes out previous day's lowest price. So here's our current day where price takes out the low of the previous day right over here. So here's the previous day's low and it's taken out. Number 3, we're waiting for a cross up on the market cipher. Then the first higher low cross up is the long entry signal. Okay, so we can kind of zoom in a little. Price coming down, it's already taken out previous day's low, but we're getting these lower low crosses up, so we can't take an entry yet. Here is our higher low cross up on the market cipher. Okay, so that's our entry signal right here on this candle. And we can place our stop loss according to the rule number 4, where the stop loss will be placed at the lowest point between the last cross down and cross up of market cipher. Okay, so here's our cross down here on this candle, and then our cross up. So our lowest point is this candle here. Okay, that's where the stop loss is. Number 5, take profit target using a 1-to-3 risk to reward ratio. So that's what we have here on the chart. And then moving the stop loss to break even when price has reached a 1-to-2 risk to reward ratio, or 2 times the risk in the trade's favor. So that would be right around here. And then continue targeting 1-to-3 risk to reward ratio, which is hit over here. All right. So it's just the opposite of a short entry, of course. We can take a look at some more over here. So let's just start at the beginning. Let's go through some examples quickly this time. So previous day, over 200 EMA, sweeps previous day's lows. We see higher low cross up right here for the first time. Stop loss placed, lowest point between last cross down and cross up right here. That's the trade setup, successful. Okay. Now, second trade in the same day, we actually have price make a new low, so lower low of the day after our first trade is already done. So we look for the same setup. Here's the cross up, higher low cross up right here on this candle. Ends up getting stopped out right before price goes in the trade's favor. So, maybe some trade optimization or strategy optimization can be done to prevent this by just having a little buffer below. But, sometimes you just got to have to take the loss and move on. So let's move on. Next setup. So here it again. Previous day's lows swept on this current day. And we're looking for our higher low cross up. So here's our cross up. Here's our higher low cross up right here. This one reaches 2.8 times the risk, but this one will get stopped out at break even according to the rules, because once it's at 1-to-2, we'd go break even on the stop loss. So here on this candle, we'd get taken out at break even. Here's another one. So in the same day, makes a new low. So we look for the higher low cross up, which we do get right here on this candle. And right before trade, price goes in the trade's favor, gets stopped out according to our rules. Okay. So again, as I said in the last one, could do some sort of buffer or maybe some change in the rules where you have a better entry or a little buffer, something along those lines. I'm sure, you guys can figure out a way to make it a little bit better, as this is just kind of a rough draft of the strategy, which still had some very impressive results. Let's move on to the next one. So here's the day we're looking at, previous day, current day right here, sweeps lows of previous day on this big push down. We're looking for our higher low cross up after that, which happens right here. Here's our first cross up, higher low cross up. That's the entry. Trade ends up getting stopped out at break even after we get 1-to-2 risk to reward ratio in the trade's favor. Okay, so those are the examples for longs. There's pretty much nothing else to go over here, so I'm going to fast forward through the back testing and then go over the results. All right, here we are with the results. Bitcoin US dollar was the pair tested here. Time frame was 15 minutes, and the risk to reward ratio used 1 to 3. It took about 10 months of price data for the 100 trades, and out of those, 43 were winners, 15 were break even, and 42 were losses. Very, very impressive results for a 1 to 3 risk to reward ratio. The best I have seen, frankly. We'll put it on the strategy ranking spreadsheet to compare. But most wins in a row was 4. Most break even in a row 1. Most losses in a row 4. Gain on the account 87%, assuming a 1% risk of account equity per trade, also not compounding the growth. So very, very impressive results. One of the best I've ever tested, if not the best. So let's put it on the strategy ranking spreadsheet and see how it stacks up. All right, here it is on the strategy ranking spreadsheet, falling at spot number 2, although it's debatable where it should actually be placed. We have 10 months for 87% gain on the account, or 11 years for 121. Down here, we have 55 days for 74. So, it's up to each individual to decide what they want to do. But this one had very impressive results, regardless of how you want to rank the strategies. And so it's definitely worth taking a look at. This is the 100th strategy to be tested on the channel. I actually got rid of the previous second place holder because it wasn't a full strategy with a stop loss and take profit. So this has replaced it. Last week's video, I did testing sweeps on daily highs and daily lows to see if that would be a valuable addition or something to create a strategy around. So this is that strategy, and that's why it's replaced it for the second place holder. So titling last week's video, one of the best strategies I've ever tested was actually true now that I created a system using that idea. So thank you guys for watching. That will cover it, and have a great day.